Good morning, good morning. Good morning, good morning. How is everyone doing out there? So we're going to have some fun today. I'm going to pop the presentation out onto the monitor here so we can get this started. Just give me 1 second. And if you'd like to watch this live, you can do so on my YouTube, Bookmap's YouTube, Twitter, or the Bookmap Discord. We're kind of all over the place today. It's pretty cool. So hope everyone had a good holiday weekend break here. We're coming back into a market where there's some pretty consequential events that are going to be playing out here, not the least of which will be NVIDIA earnings, but I think Fed minutes will also be pretty important. But before we get into all of that, let's fire up this little presentation I made for everyone. So first up, I'm Markets of Mayhem. You probably know me from Twitter, YouTube, or elsewhere. I've been trading for 19 years. I started with stocks, moved my way into options, Forex, futures, and navigated my way through the great financial crisis. Made some great trades, made some big losers, but learned a lot along the way in that experience, and it's helped to shape how I trade, being more systematic, more oriented towards momentum, and more disciplined in my approach over time. You want to learn a little bit more about my work, I welcome that. I have a website that helps traders with education, idea generation, and tools. That's Traderade.com. We've got a 30% off sale going on until tomorrow with the code PREZ30, P-R-E-Z 30. Also, check out macrovisor.com, where we take momentum and macro to find opportunity. We find when the two are aligned, there is a lot of potential longer-term trades and investments. Of course, check out my YouTube. You might be watching me on it right now, but if not, that's youtube.com/mayhem at youtube.com/at mayhem number 4 markets. Kind of a weird format there. And then also, we've got a pretty special offer with Bookmap themselves, up to 40% off. You can go to traderade.com/bookmap and scroll down to the specials. Now, here's everyone's favorite part of this presentation, where I read this text really fast, and then you can all tune out because that's it, right? Half kidding. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, let's dive into the good stuff. First, we have stocks net call volume absolutely surging here. Now, this is one of several signs of potential euphoria. And we're going to go through a couple other charts that show the same. And the reason is this is a bit of a theme. I think we are at risk of a pullback. I think that pullback is much more likely to potentially start this week with some of the catalysts we have on deck and how the market is structured going into a period that tends to be more vulnerable. So with everyone piling into tech stocks, this is mega cap growth and tech call volume, the highest we've seen since late 2021. It begs the question, what is the distribution of skew? How much are people paying and how much more are they interested in calls than puts? Well, that skew here for S&P single stocks is the highest we've seen since 2021, late 2021, right? A bit of a theme here, if you will, what we're seeing. And I think that warrants a bit of attention. That is to say that people are really positioned for upside, up, and away, and not really much else. Now, is that possible? Absolutely. Is it likely? It becomes more difficult with this type of structure. And that's what I wanted to draw our attention to as we get into the week ahead. So next is we have CFTC overall buy-side positioning is near 5-year highs in equities futures. Okay, so this is like S&P 500, NASDAQ, Dow, Russell. Folks are really, really, really long. So we see that they're aggressively buying calls. That's euphoric flow. We see the positioning in skew and in CFTC overall buy-side positioning in futures also quite extended. So those are areas where, you can put up a bit of a yellow flag and say, okay, that's mildly concerning. Now, we also can talk about breadth. It's a bit of a tired subject. I know that we've been talking about it for quite some time, but it actually starts to matter a lot more when you're making all-time highs. When you're making all-time highs and it's on poor breadth, when like 5 stocks are leading the whole market higher, that starts to look more like a blow off top. Is that the case here? We don't know yet, right? We'll be watching closely and we'll talk about some of the risks that we're seeing. But at the end of the day, I think that the lack of a broadening out is a concern amid these all-time highs. Now, this is a chart of the distribution of moves between the NASDAQ and the S&P. Traders are looking for much bigger moves in the NASDAQ this week than the S&P. That ratio is now about 1.5. So really looking for about a 50% bigger move in the NASDAQ than the S&P. A lot of that has to do with NVIDIA earnings. NVIDIA is now the third largest company in the United States, fourth largest company in the world, of course, third largest company in the NASDAQ as well. And the Goldman Sachs equity move model implies that we may be seeing some of the largest moves as we go in the next 1 month. They're looking for a 31% probability of a 5% up move and a 22% probability of a 5% down move. That's the largest. If you look at this chart, that's the largest probability distribution we've seen for the upside since 2021 and for the downside since late 2022. Hedge funds are really concentrated in semis ahead of NVIDIA earnings. We can see that in this positioning map here. This is really interesting to me. I didn't necessarily think folks would be this concentrated in this sector ahead of such a pivotal event, but here we are. We can see the SOX index in gray, semi and semi-equipment net exposure in blue, and that equipment exposure is the highest that we've seen since the summer of 2023 when, things were getting pretty darn euphoric as well. Then we saw a meaningful pullback over the months ahead. And the share of the top 5 companies by market capitalization in the S&P, the top 5 annotated through history, often is the case when it gets this concentrated, there is some room for an unfortunate event. So I don't want things to come off as too bearish. I just want to kind of raise a little bit of awareness that there are a lot of alarm bells going off here. And when they do, I tend to post about them. I don't try to, drown out other ideas, but I think this particular situation calls into question the durability of what we're experiencing and, whether or not it's a decent time to consider maybe raising some profits and looking for some hedges. 6 month out at the money S&P puts are incredibly attractively priced here. And let's look at the weight of the information technology and communication services sectors in the S&P versus earnings. Earnings are not catching up with the way these are performing. That's another risk. And speaking of earnings, guess what? We've got NVIDIA earnings Wednesday after market. Everyone will be watching this. I think it will be a pivotal event for how the markets trade for the rest of this week and probably the rest of this month. So I think this is going to be a pretty important one. We did see what happened to SMCI on Friday. That was an extraordinarily lopsided trade. NVIDIA is actually not that lopsided. SMCI was so lopsided on call positioning that it was probably the most distorted I've seen a single stock ever. Now, we're not going into NVIDIA earnings with those dynamics, but we are going in with very, very high expectations of exponential growth continuing in the future. At the same time, you do have potential competition coming online. Intel and AMD have made different attempts to run CUDA binaries or NVIDIA specific binaries on their own hardware. And those endeavors are actually making progress. What does that tell us? It tells us that as time goes on, you're not going to need NVIDIA hardware to run code written for NVIDIA hardware, which could reduce the demand for some of these really, really profitable H100 chips, where they make them for about $3,200 and sell them for about 30 grand. Now, let's dive into some charts, shall we? First up on screen, we've got the S&P 500. And we can see the 20-day moving average is really important here. We did get a couple of pops on it. We also have this trend line right below. This is what I'm watching here. I won't be getting too bearish until we actually break below both of these. If we do, then I think on a swing time frame, we have room to the downside. Okay? In the near term, we're just seeing a stalling of momentum, a bit of a correction in time rather than price. Now, corrections in time can become corrections in time and price. And so that would require me seeing, a bit of a move down here. So I'm really looking at 2 specific spots, right? I'm looking at this 20-day moving average. And so if price moves below that 20-day moving average, I would be a bit concerned. And then if it moves below this trend line, that's where I'd start to get a lot more concerned, because we do have a number of key levels, particularly this 48.99.25. If we move below that, there's really not a whole lot of convincing support until 47.69.50. So I'm looking at this chart saying, we're a little early to be going really short. It's not a bad place to take some profits, but if we do move below these two key areas, that's where I start to get a little bit more aggressive looking for downside. The NASDAQ has a similar, albeit more perilous look here. That is to say, it is now testing that 20-day moving average. I didn't extend the trend line, but it's just above that as well. And we can see down here, RSI is moving lower. So that's telling you momentum is not on the side of the bulls in tech right now, as we're seeing some signs that this is actually a little weaker than the S&P. S&P looked like it was more kind of, topping out at the same area. The NASDAQ's actually not even able to reclaim that prior high and is starting to show some signs of potentially rolling over here. The Russell comparatively looks better than the NASDAQ, and in some ways better than the S&P as well, though I think some of this has to do with short covering that was happening last week, because the Russell is really one of the favorite shorts of hedge funds to balance out their portfolio. And so when they do, when they balance out that portfolio, they're looking at shorting the Russell, going long mega cap tech, right? And so that ends up being a bit of a pair trade they put on, and when it's not working, they tend to cover the Russell, and last week it wasn't working so well. So some of that upside there, that might have been from hedge fund covering. So just something to take into consideration. I know there's some bullishness on the small caps here. I'm not saying folks are necessarily wrong, but take into consideration SMCI has accounted for like 85% of the Russell's upside this year. And what happened on Friday might call into question whether that's durable or not. Now we have gold on screen. Gold just trapped. It's just trapped in a range. Doesn't really seem to be doing much. I do like some of the upside we saw late last week. It brought RSI over 50. I do still need to see gold push above this point of control and ultimately 2071 to say we have a chance at 2100. Citigroup did put out a note. They're getting more bullish on gold. They're looking for the potential for $3,000 gold by 2025. But for me, I still need to see really a breakout. And honestly, because this area here has been such an area of resistance, I really need to see a breakout above that 2098 level to be convinced that we're going to new all-time highs in gold. So for now, we break above the point of control. We got room to 2071.50. We break above that. We've got room to 2098. We break above that. We've got room to all-time highs. But I think that journey is going to be a bit tricky. Next, we've got crude oil, which overall still looks bullish, but it is below this trend line here as of trading this morning. When I took this, I'd like to see it break above there and 79.75. I think if it does, that's where we've got room for 86.52. We can see some building up in momentum here with the RSI. I'm still leery, though, because we can see that this is an area that we're at right now where there's been a lot of resistance in gold in the past, in oil in the past. We can see that in multiple different areas. So is this time different? Well, let's let price be our guide and tell us. Now we've also got the 2-year note futures. These are really important for interest rates. This is kind of like watching the market's expectations for the Fed. The higher price goes, the easier people expect the Fed to be. The lower price goes, the more aggressive their pricing in the Fed's resolve, right? So we've had this sort of rally and then coming down as we're starting to hit reality that maybe some of those expectations were just a little inflated for 5 to 6 cuts this year to start as early as next month. So we're seeing a bit of a reevaluation here. I think if we cannot hold this 101.28.1 level, that was support in the past, we do have some potential to move further down, and that could come with any data that suggests that the economy is stronger or inflation is coming back. That tends to be a big mover of interest rates. Similarly, we see the 10-year note futures also showing that look of rolling over, consolidating of late. But if they break up below 109.01, I do think they have a lot of room to the downside, which would imply the 10-year note rate moving well above 4.5%. Euro USD actually looks like it's trying to stage a rally here. Interesting in light of rising interest rates, which is typically bullish for the dollar, and the euro is the biggest counterbalance in the dollar index. But nevertheless, watching this one closely because it's broken above this downward trending line. It's broken above the 20-day moving average, and it could have some room to run here. So we'll be watching this intraday to see what's going on with the euro. Another area that's somewhat encouraging is RSI starting to break above 50. And then finally, we've got the US dollar versus the yen. And there's really nothing to like about the yen here. There's everything to like about the dollar. We're continuing to see the Bank of Japan, you know, talk more dovishly. Their country is now in a recession. So there's not a lot of reasons for them to look at tightening policy in the here and now. So I do think that the yen has further risk to the downside, which tells me, the dollar could get back up to this old area, this 105.91 area. That's what I'd be looking for from this move before I take off my core. So that's everything I have in the presentation. Now we're going to move over into Bookmap and take a look at the markets and concentrate on some of this microstructure here. If you're not watching this live on YouTube, Discord, or elsewhere, you definitely should. You're going to get a lot more value out of it seeing everything live that I'm sharing than hearing it on voice. Although voice is fine, and I'm hosting a spaces and I appreciate you all tuning in. I think you'll be able to get a little bit more out of seeing what I'm talking about here. So on screen, I've got the S&P 500 futures. We're just about 15 minutes away from the open, kind of a flat trade here pre-market. And if we look at the implied open here, it's about down 30% for the S&P, down about 0.4% for the NASDAQ. So looking at a potentially downside open below S&P 5,000 on cash, which is kind of important because there's a really, really, really large area of options positioning at that same level at S&P 5,000. So let's take a look around some of the other parts of the market here. We've got the NASDAQ. NASDAQ is obviously the more volatile brethren of the S&P. We actually see a really interesting spread of resting liquidity in the NASDAQ. This is somewhat unusual because this is not a very liquid trading vehicle most of the time. So you can see the NASDAQ order book depth is about 7,400 across the entire book. So when you see this many contracts sitting there waiting rather than moving with the bid, particularly right under here, this 115 at 17,655, that's noteworthy. That's a decent amount of the total order book liquidity just kind of hanging out down there. So someone is looking to either cover a short or buy exposure at that price. We also see more resting liquidity even lower in the NASDAQ. Now, again, the reason that I draw attention to this is it's not often that you see it. Okay. So most of the time, the NASDAQ contract is kind of thin and you don't see a lot of resting bids or offers. So this is different. This is unusual, and it does suggest there's a lot of interest in lower price. Russell is seeing some negativity pre-market, pulling down that point of control as we've seen some selling. Small caps probably not set to have the best day, but we'll see what the cash open brings us. Gold is just chilling above the point of control, but consolidating. We do see some distribution here as throughout the period of time we've been watching, the cumulative volume delta has gone from positive to negative, indicating there is some distribution under the surface. Crude pulling up its point of control in sort of a stair-step pattern here. I just rolled this contract over, and so I'm just going to clean up the chart for some of these subchart labels here that get a little bit busy. All right, and we see that, there's just a bit of volatility here, but overall going into today, crude is just marginally lower. And of course, cocoa is, wow, I don't have it on screen, but cocoa is nearing all-time highs again. So that's been an interesting trading vehicle. 2-year note futures, bit boring, no real catalyst for this one today. I do watch the economic calendar pretty closely. Today we had a speech from Bostic at 8 a.m. We have a Bowman speech from the Fed at 1 p.m. We've got Fed minutes at 2 p.m. That's sort of the crux of the economic calendar for today. And I don't see any real summary from Bostic's comments on the news feeds that I'm watching, so maybe not too much discussed of interest. Going to the 10s, similar to the 2s, not much of a catalyst there. 30s, pretty similar as well. We do watch all this because some of the big moves intraday can be led by rates, which I think is a really important intra-market dynamic to pay attention to. Then we've got the euro. Euro is continuing to move higher here. This is something we talked about a little bit in the charts before we dove into Bookmap, that there was some room for the euro to continue moving higher because it had that double breakout. And then we've got the yen, which is also marginally higher. We see the point of control pulled lower by sellers, but the yen is starting to make a bit of a recovery here. So we've kind of gone the rounds across different futures contracts. I'm going to go back into the S&P here. We're going to zoom out just a little bit. We can see that there is a very large resting bid down here around 49.82. So that is going to be a level that's worth watching if we do have a pull. Similar down here around 49.49. And just below that, we've got the second largest area of gross gamma exposure. The largest is right here at this volatility, volatility trigger. I'm sorry, we don't have that on screen yet. But this gamma flip level is right on screen, and that is kind of important because if we do push below it, some of the dealer hedging dynamics are likely to change. And what that means is below that gamma flip level that our naive model has calculated, it is likely that you see dealers more inclined to sell dips and buy rips, right? So that's different than the dynamic we're in right now. We're at positive gamma. Positive gamma indicates buying dips and selling rips, which is kind of a compressor of volatility, right? So if we do get into that negative gamma territory, we do expect volatility could increase. So it's something to keep an eye on, and that's going to be, really pushing convincingly below ES 5000 and building acceptance there. Now, as we're approaching the open, we do see more resting liquidity building below us here. Pretty convincingly large levels of resting liquidity. So there are other players in the market that are looking for this thing to pull back today as well. At least that's how they're positioned now. Cash opens in about 9 minutes, so we'll see what it looks like after that. Let's take a look around the news, see if there's anything interesting as we get into today's trading day. Oh, my partner Aisha puts together an awesome note every morning that whether you're an investor or a trader should consider checking out, called Breakfast Bites. It's on Traderade and MacroVisor. And some of the stories she covered that I think are worth talking about. China cuts their 5-year loan prime rate, left their 1-year rate unchanged. So, looking at China, there are some stimulative measures being taken in increasing force by the government. There's also more stimulus happening for mortgages. They've cut those rates as well. So that tells us that, they're still trying to get this economy off the mat, but it is an economy that remains, I would say, troubled. Home Depot had some comments on the consumer. They said, our market is on the way back to normal demand conditions. Pressures we saw in 2023 are receding. Demand for home improvement dipped throughout the year as consumers spent more of their dollars on experiences. So that actually is a trend that I think is going to continue. This idea of focusing on experiences now, rather than just saving and working hard and then hopefully one day retiring. We see a lot of young people changing their attitude towards life. So it's very interesting to see that, even Home Depot is mentioning this. The Financial Times shared some alarming concerns on U.S. commercial real estate. Again, this is all from Aisha's Breakfast Bites this morning. And I think it is interesting. We are seeing pockets of regional weakness, and it's really in the office building space. That's where most of that weakness is. And it's in major metropolitan areas. San Francisco is probably the hardest hit. So, there's going to be some regional banks that take a hit on this. I don't think it's going to be the big money center banks. I'm not really worried about JP Morgan or Citigroup or Wells Fargo on account of commercial real estate. But some of these regionals where their loan books are very concentrated in office buildings, they could have some trouble. And the New York Community Bank situation could be a bit of a precursor of what to be concerned about there. So that's the recap of some of the most important stories. One other I'll mention is Capital One is going to buy Discover Financial, deal valued at about 35.3 billion. That's going to be one of the biggest deals that we've seen in a while, and certainly the biggest deal of 2024. And they're aiming to close that deal in late 2024 to early 2025. That's a pretty big deal. I'm just going to zoom out a little bit more here. Well, we do see a big resting offer above us here around 50.75, 549 contracts up there. It's a lot of call interest in SPX if we adjust that for ES levels, pretty close to that on Friday. And there is a call wall, or the largest area of net call positioning, just up above. And I'm going to imagine that's at about I'm sorry, that's going to be about SPX 5100. I think the delta at this point is about 1250. And so we are just about 4 minutes away from the open here. Things can change pretty quickly once the cash open happens. It's why I like to watch these liquidity levels. It's also why I start Bookmap quite a bit before the cash open, because I really like to have that historical heat map of where things were. So I get a sense of kind of how those convictions and positions, or at least resting bids and offers, change as the market opens. And then about 10, 20 minutes after the market opens, we'll have a better sense of what the options activity are, what's transacting, where there's interest, and that'll start populating on the SPX options visualizer tool that I built as an add-on for Bookmap, which is now on their marketplace. And I find it to be pretty helpful for my own trading. That's why I built it and then eventually made it available to the public. Let's take a look at the NASDAQ here too. We see a little bit of a pull ahead of the opening bell, and we do still see those large resting bids below us. We'll zoom out a little more. So it's really just that pocket of liquidity below us. So we'll keep that chart zoomed in just like that. Russell seeing a bit of a pull, also seeing some interesting resting bids below it developing. And gold chopping, consolidating sideways here, but still seeing that CVD dropping, some more distribution there overall. And I'm just going to clean up this chart of crude, the subchart indicators here. There we go. And remember, we're watching for basically crude to break 80, and then it probably has about another, $8 higher from there. Rates actually giving us a little relief ahead of the open, which is interesting to see stocks going the other way. And that's across the 2s, the 10s, and the 30s. And the euro climbing, meaning the dollar's weakening, again, making it a little more interesting that stocks are going the other way. Typically, these intra-market dynamics would suggest that there'd be a bit more of a bid. We'll zoom in a little more on the S&P ahead of the open here. We've got about 2 minutes left. Opening bell in about 1.5 minutes. Google is preparing to roll out their Gemini subscription with enterprise plans for workspaces. Interesting. I guess if we rename Bard to Gemini, it suddenly becomes a viable product. We'll see how that goes. OpenAI's Sora's weaknesses exposed shortly after high-profile debut. This headline from Benzinga: a cat sprouted an extra leg, and a human's arm goes awry. So that software looked really cool at first, but maybe it's not so perfect after all. Maybe it needs some work. It's very early stage. I still think it probably has a lot of potential, but I'd be very concerned about the quality of deepfakes that could come out of something like that, because boy, some of that stuff did look pretty realistic the first go around. Obviously, if you watch the videos more and more, you can start to see some of those imperfections in them. And market is opening right now. So we'll zoom out a little bit, see what changes in liquidity happen or do not happen. We see a little bit more liquidity building above us here. We are in a week where we don't have those supportive flows from the decay of puts in SPX. So that does open the possibility for larger moves, potentially to the downside, should there be a catalyst. And that's the big caveat. There does need to be a catalyst. Which is why when we're looking at rates and the dollar today, both going down, that's relatively constructive for stocks. But again, there's just such aggressive positioning all over the place that it does beg the question: if everyone's loaded onto one side of the boat, does it start to tip over? We'll definitely have to see if Nvidia is that seminal moment or not. And folks, if anyone has any questions as I'm speaking, please don't hesitate to ask. I'm always happy to help. Just make sure if you're on the Bookmap Discord, you tag me in. And if you're in any of the chat rooms, I should see them, but I'm in like 4 of them right now. So I am just kind of periodically checking around to see where those questions may come up. I see someone requested to speak on Spaces. I'm sorry, I'm not going to take requests. It wouldn't be fair to the other folks because they wouldn't be able to hear you. So I won't be taking requests on this Spaces, but in the future, I'll be more than happy to. Do see a little bit of a bid as we see the market opening. We're just in the first 2 minutes of trading here in the S&P, coming up about 4 handles off those pre-market lows. NASDAQ, much bigger bid. Really quite a bit of excitement here. The resting bids below us thinning out just a little bit. So maybe that conviction waning. The Russell actually seeing a pull, the opposite move here than what we're seeing in the other stocks indices here. Gold getting a bit of a pull lower. Crude getting a bit of a pull lower. Rates continuing to move lower across 2s, 10s, and 30s. And the dollar moving lower as the euro and yen move higher. We'll go back to the S&P, which is continuing to build on that earlier strength. And this opening bid is on reasonable volume. Typically is the case that a lot of transacting happens in the first hour, hour and a half, and the last hour, hour and a half of the trading day. The middle part is generally a bit more hollow unless there are some outside catalysts. So lots of institutions transacting here. That's one of the reasons the volume is going to pick up right after the opening bell. Let's take a look at the NASDAQ. NASDAQ's actually seeing a little bit of a pull after that bid from the open here. Russell's bouncing off of its lows after dragging the point of control lower. Just testing VWAP here. Intel in talks for 10 billion plus in CHIPS Act incentives. This is coming in from Bloomberg. The stock is bid to 45.02, up $3. $1.51, 3.39%. So that probably helped a little bit with this initial bid in the Nasdaq, but semis are a very crowded trade right now, so I'm not sure how sustainable that is. S&P looking comparatively stronger to the Nasdaq. Now, I like to look at the Nasdaq as a momentum leader. So usually as the Nasdaq goes, the S&P goes, and we can see a little bit of weakness coming into the S&P after the Nasdaq started rolling over, right? So the Nasdaq, once again, as I've said on like every single one of these streams, it tends to lead, and it is today in both ways. So I do like to look at the 20-minute opening range to get a better idea of what the trend may be shaping up for intraday. So we're about 15 minutes away from really being able to form that. So I'm not going to try to make any decisive directional calls intraday until we've formed the opening range and broken out one way or the other. Then we can talk a little bit more about what the probabilistic outcomes are on that basis. And we'll have some options data to look at that point as well, which will give us a little bit of a better idea as to where those extensions may go. NASDAQ rolling over back to VWAP and the point of controller, some convergence there, right around 17,680. Seems like there is some interest in buying around that level, at least right now. And Russell kind of doing that same round trip that S&P were. Let's see if the S&P is starting to stabilize. Yeah, S&P is starting to stabilize. Didn't make quite the same round trip as the NASDAQ, but it's very low volume here. Not a lot of conviction in the current tape. And seeing a bit of a pull again. NASDAQ now coming back lower, breaking below the point of control. Liquidity below it starting to thicken up again as convictions of those bids seem to be rising, looking for price to come down. Russell rolling over as well. Gold getting a bit of a pop here, but still looking pretty bearish overall in the shiny stuff. And crude rolling over. Rates seem to be consolidating here across 2s, 10s, 30s, still giving us a little bit of relief. And the euro giving back a bit after we hit this really large resting offer. And we're just testing that gamma flip level here as well, which I think is pretty important, particularly if we move below it and build some acceptance. That tells us that we start to enter a different trading dynamic, which is likely to be more volatile. SMC stock is down 5.75%. Thanks for the heads up on that one, Will. That's pretty interesting to see. And the call skew on SMCI, as I was mentioning earlier, was so absolutely nuts in terms of bullish upside speculation that an event like Friday was all but inevitable, and some continuation therewith was not terribly unlikely. Nvidia getting pulled down about 3% here today. Intel was up about 3.5% earlier. It's giving that back. It's now up only about 1.89%. AMD down 3.5%. The semiconductor ETF down 1.61%. That's SMH. SMH is, believe it or not, 20% NVIDIA now. So it's pretty much the NVIDIA ETF, if we needed one. I mean, the NASDAQ, the QQQ is kind of the NVIDIA ETF as well. So I guess we got several different NVIDIA ETFs. And that pull continuing now below that gamma flip level and filling in these areas, these resting bids below us that we talked about pre-open as areas of interest where large players were looking for price to come down a bit before they were willing to buy. NASDAQ, similar look, getting into these large pockets of resting liquidity below where large participants who move lots of money around were expressing interest in lower prices, and they're getting that. Russell, similar look, pulling below the point of control. You got more liquidity building below in the small caps. This 2000 level is pretty important, just about 11 points below us. Gold chopping sideways, crude pulling lower, rates seeming to have bottomed here so far, and the euro pulling back a bit here. Go back to the S&P, which is continuing to pull back here. Looks like there was a valiant effort by buyers early this morning to try to buy the pre-market dip, and it just doesn't seem to be playing out. Caution is advised on weeks like this. The reason for that is really this is a week where it is more likely that you get these pullbacks. The risk of them are higher because of the lack of those supportive options flows, because it's not a well-hedged market, and because of how lopsided long positioning has become. So you've got all these convergent factors that suggest that, maybe, just maybe, we're in a bit of a euphoria here. We've had a bit of a melt up, and a pullback is healthy. Doesn't mean we're like immediately going into a bear market or anything, but a correction in time or price, as I've been saying, is healthy. If you're, bullish on the market, or if you just have stocks, assets, like everyone, then you don't want to see things go straight up led by just 5 stocks. It's not healthy. You really want to see a broadening out and a bit of a rotation into some of the lesser loved parts of the market, so it doesn't look like a speculative euphoria. And, a pause is healthy, a pullback is healthy. So it's not just all, looking for bearish outcomes. It's more looking for markets to perform as one would historically expect them to perform, in a way where we're not pulling forward so much of the future returns into the present. So we can see the S&P getting just a little bit of a bid here. Let's take a look at the NASDAQ. Similar look as well. Again, we like to say the NASDAQ is the momentum leader. Certainly today, it's given us a lot of those clues. I think the NASDAQ was the first to really pull back and then try to stage a bit of a counter trend pop and then continue pulling back, and the S&P followed. And it seems to be continuing to do that. And we see this resting bid below us around 49.81 growing. Now 670 contracts. That's not big enough to be what we call like an inverse death cloud. I think it's a term my partner, made up. But, when you see like a huge thousands and thousands of offers above us, he would call that a death cloud because typically price would get there and stop. And then the inverse death cloud is like thousands and thousands of bids below us, and it's just so much liquidity that typically you kind of run the other way. right? Almost contrary to auction theory. This isn't big enough to be that, but it is big enough to act a bit like a magnet. We're about 13 minutes into the trading day, going about as expected. Still waiting for that 20-minute opening range to form where I can really be more confident about some of the statistical probabilities here, but I'm just going to hypothesize that this is going to be a red day, and we'll go deeper red as the day goes on. We'll see if the opening range confirms that before we get too much conviction about that idea. NVIDIA now down 4.85%. See just a little bit of iceberg selling in the NASDAQ here, too. On that pop, someone came in with 234 and basically sold right into that. So there is an appetite to distribute by some of the larger players. These iceberg orders, when you see them on top, that means it's a sale, and you can confirm by looking at the subchart here, and you can see how that pushed down the subchart level. So that was telling you that was indeed a sale. Let's take a look over here at the S&P. There's a lot of selling aggression from 5,000 and below. So for sellers to remain in control, they really got to keep this thing below these levels. If price starts to move well above 5,000, not only would that be above the point of control in VWAP, but it also put a lot of these aggressive sellers off sides. So they need to keep the momentum going. They've got work to do to kind of be safe. It's not automatically a win for the sellers here. If we pushed up, 15 handles or more, they'd probably get a bit nervous and start covering some of those shorts. Now, we do see sellers pulling down the point of control here. Just happened. That is a bit bearish to see. That shows us there's a lot more volume transacting here. And if you look at the session range volume profile, you can see that, right? You can see that 705. There's a lot of interest around this 49.90 level. We should have our options data populating shortly here from the SPX options visualizer for the intraday flows. We do have the larger positioning levels where we examine the entire options chain of the S&P still visible here. Those are always there, but I calculate the top 2 calls and puts that are transacting on the S&P 500, and then I adjust them for the S&P 500 futures levels. There's a delta of about 12.5 points now, and then that populates on the screen. So you can see it right now. Hot call, 201 volume. Warm call, 21 volume, right? And then you've got interest in the most active put contract. That's the most active contract on the entire chain. The hot put, 210 traded there so far. Quite a bit lower than price. So you can see where larger traders are starting to indicate their interest. They're looking at lower prices, quite a bit lower prices on the put side, about 1% lower from where we are right now. And we'll keep an eye on those levels. This SPX options visualizer was built for Bookmap. I built it over the last several months, tested it rigorously, and now it's available on the Bookmap Marketplace. "82 out of 104 economists who were polled say the Fed will be cutting the funds rate in Q2. A slight majority of 53 say in June, 33 say May. I'm going to lean more towards July personally, but I could be wrong. And those same economists are looking for rates to be cut by 100 bips or less in 2024. Personally, I'm leaning towards less. 50 to 75 bips is the higher end of my range of expectations, particularly considering some of the inflation data that we've gotten recently from CPI, PPI, and services PMI and manufacturing PMI, all kind of indicating there are some risks that inflation could stay a bit more sticky. Plus, wage growth still remains elevated, and that's one of the drivers of inflation in the services industry as well. We can see that most active put contract now moving up. 1,000 transacting actually right here at this area of pretty significant interest. So we do see the warm put, the second most active put, still quite a bit below, but the most active put strike is just about 8 handles above price. I'm going to imagine that shifts around as we trade here, but this is still interesting to see, and it could act a little bit like kind of pulling price back into this area around VWAP. We'll see. What it does tell us at the very least is there's a lot of interest in transacting at that level, just around the gamma flip level, just around VWAP, and where there's a large pocket of liquidity above us. Let's take a look at the NASDAQ here. It also seems to be trying to base. Sellers did pull that point of control lower. Russell still hasn't seen the point of control pulled lower since we saw that at the open. And it's a bit of a choppy trade. It's kind of retesting that from below, but with minimal volume. There's like no transacting happening here. Gold just getting a little bit of a bounce here. Let's zoom out, see if there's any interesting liquidity. Yeah, 2045, 129 on the offer there is interesting. This is a thin trading vehicle too. There's only 4.8 thousand in the entire order book. So that tells you that, it doesn't take a lot of volume to move gold. Crude getting a bit of a pop here. You do see some interesting areas of resting liquidity. This is another thin trader, right? There's about 7.9 thousand cumulative order book across the entire order book. So what is that telling you? It tells you that this resting bid at 77.80 and this resting offer at 78.50 are both important. Those are important levels because we see large traders positioning themselves around them. Let's take a look at rates. Coming up, they went a little bit higher as we saw that market pressure. Now we're seeing some relief, just as there's some relief in equities as they're basing. That's not a coincidence. The equity markets pay very careful attention to rates. Now, there are divergences. They don't often last terribly long, particularly in this environment where everyone's watching rates pretty closely. Let's take a look at the euro. It rolled over coincidentally around the same time the market was pulling back. Now we're seeing some relief, just as the market's seeing some relief. Those intermarket dynamics are really important to watch, right? So let's see if that helps. Let's see if the rates coming back lower and the dollar pulling lower helps these markets. If not, if there's still that level of relative weakness, that's a further indication that this is kind of a bearish distribution day. We have formed our opening range here, right? So we've got the top of the range here at about, let's just call it 5,850. And we've got the bottom of the opening range here at about, let's call it 49.89. Make it clean. If we break below that 49.89 and build acceptance, that's an opening range break lower, and that statistically indicates the probability of continued downside. Nirav, that's an interesting question. In terms of stops, the way that I contextualize that, and we are seeing this now break below the opening range, by the way. Let's see if we build some acceptance, but so far this is looking pretty bad for the SPOOs or the S&P. So I look at stops as price-sensitive, momentum-driven intraday trading for the most part. And so when you see a really large blowout of stops, like right now we just saw 282 stops, like there are buyers stopped out having to sell their contracts. I like to see, to kind of contextualize it, I like to see passive accumulation as there's active distribution. So what I mean is, like in this scenario, to say like we're approaching a potential bottom and reversal, I'd like to see a much higher level of stops, say 500, 1,000. At the same time, I'd like to see icebergs absorbing them on the buy side. When I see both of those, I get a little bit more excited that there's some potential for the market to run, right? To reverse and run higher. We're not seeing that in the here and now. I think a lot of this has to do with technical traders getting pushed out. Some folks were probably looking at the bottom of that opening range and saying, boy, if it really breaks that decisively lower, I'll stop out. But it's, for me, it's not until I start to see exhaustive levels of stops in a nutshell without the iceberg participation that I get a little bit more interested. And for me in the S&P, 282 is not quite that. Again, I need to see like 500 or 1,000. And then price starting to move the other way. What that would tell me is you kind of had a big stop run, and now maybe we're starting to see things normalize under the trading by stronger hands who are a little bit less sensitive to price. But right now, we see a little bit of the opposite. We don't see an exhaustive stop run. We do see liquidity building below us, and we don't see institutions really interested in taking large buy-side positions via icebergs. Let's zoom out and look at the liquidity. Boy, that hot put moving all over the map here today. The warm put down here at 49.70. That's where there's a resting bid of 308. So that is convergence. That means that this level is really important, but we still need to chew through a very large resting bid, just about 49.82 to get there. This is now a large enough resting bid where it may act as an area of support. It is over 1,000 between these contracts being stacked up, the 234, the 205, and the 677. So I think that's important to watch. How do we react at this level? But overall, we did see the opening range broken to the downside. Now we're kind of retesting that. Let's see how this goes, but I'm inclined to look for prices to go lower today than where they are at present. Let's take a look at the NASDAQ. The NASDAQ looks more bearish than the S&P. It is our momentum leader, so we do want to pay attention to that. Got about 5 minutes left on the stream. Want to thank everyone for tuning in. I do these every Tuesday at 9 a.m. And then I stream on a couple of other channels throughout the week as well, including on the Traderade Discord. If you're interested in checking out Traderade, we have a 30% discount until tomorrow. There's only about 20 coupons left. The coupon code is PREZ30, PREZ30 at checkout. You can also get up to 40% off Bookmap by visiting traderade.com/bookmap. It'll redirect you to a page. Scroll down to the bottom. You'll see the specials. And the SPX options visualizer that you see on screen is now live in the Bookmap Marketplace. You can visit traderade.com/SPX or search SPX in the Bookmap Marketplace to find it. And if you enjoyed this stream, follow me on Twitter, Mayhem for Markets, or on YouTube, same name, Mayhem for Markets, to find more of my content. You can find my work at traderade.com and macrovisor.com. Good question, Demo Trader. So no, I don't have any relationship with, let me just tell everyone out there, because I got a lot of folks listening. How does the SPX options visualizer get its data is what I was asked. Does it do so from Spot Gamma? So to be perfectly clear, I have no relationship with Spot Gamma. I respect their work, but I built my own tool, my own algorithm, my own engine in Python. And that engine goes over about 10,000 data points in CBOE's options data every minute. So it's much higher frequency than what you might see from Spot Gamma, where they're updating it like once a day. And that's fine for folks that are, slower time frame traders. I'm sure that works fine. But what I try to offer is something that is both more cost effective and higher frequency. So it pulls that data in, it factors it, it has an algorithm that's processing it every minute, and it updates that data and it puts it out through the Bookmap API, and then you can download it. So there's pretty low latency. And the algorithm is something that I've been working on for about 6 months. And I finally got it to the point where I feel like it's production ready. And so I released it, but we've been using it also on the Traderade Discord for some time. So I've had the help of our awesome community in testing it as well. And someone asked, how much is my new add-on? It is $40 a month or $400 a year. Got about 2 minutes left on the stream. Thank you so much, everyone, again, for tuning in. Really appreciate it. Have a lot of fun doing these. Yeah, you're welcome. Great question. Let's take a look here at the NASDAQ. Just again, point of control being pulled a bit lower by sellers. So this does look like a distribution day to me overall. The Russell is also getting this bid. To me, that kind of looks like we're seeing that K-shaped short covering where NASDAQ is losing, some of the big positions that hedge funds are in are losing, and the Russell is getting bid off of its lows, which is kind of an indication there's a bit of shrinking of the book. That is to say, deleveraging, where you're covering your shorts and exiting some of your longs. I think that's part of what we're seeing in today's tape so far. We'll revisit the S&P one last time. I'll zoom out for you all so you can take a screenshot if you want to take a look at these levels here. But we do have a lot of interest below that hot put moving lower. So you can see the folks that are transacting the options market, they're interested in prices either quite a bit higher or quite a bit lower, but not really right at spot. So it does provide greater potential for a more volatile day as the day goes on. There is more interest in the calls than puts right now. The most active 2 call strikes exceeding the most active 2 put strikes by about 1,000 each. So to summarize, we broke the opening range lower. We've got a lot of interest below. I think this 49.80 level is going to be really pivotal. If we do break below it, I think we've got some pretty decent chunky room to the downside here, particularly down to 49.70 and then this hot put level, which is dynamic. It'll move as transacting changes throughout the day, but for right now, it's about 49.64. So thank you everyone for tuning in. This has been my stream. Back to the futures with Markets and Mayhem. Really appreciate you checking it out. I'll catch you next week on Tuesday on the Bookmap YouTube, and I'll be around Twitter, YouTube, and the Traderade Discord for the rest of the week, sharing my thoughts and insights. Talk to you soon.